Hi everyone, this is Scott Remite, your presenter for today. I just wanted to welcome everyone to the Borrow Smart Analysis webinar, Convert More Leads into Loans. Today you actually have two people on the call. You have myself and Mark Teteris. He's going to be our guest speaker. Just want to give you a quick rundown on the format of our webinar. Mark will speak in the beginning for about 15 to 20 minutes on market conditions and why it's necessary to implement a tool like Borrow Smart in the industry today. Then myself, I will go through a few examples on how to actually convert more of your leads into loans by using the Borrow Smart system. If you have any questions throughout the webinar, there is a question box, and we will have about 15 minutes at the end for Q&A. I noticed our last few webinars we've had a few questions, so feel free to type those in the box, and we will get those at the end of the webinar. Just want to give you a little background on myself. I am the Borrow Smart Analysis Product Manager for Mortgage Success Source. I successfully trained over 1,000 loan officers and hundreds of companies on the Borrow Smart software. I've had 6 years in the financial services industry, with the last 3 years with Mortgage Success Source. And I have a master's degree in finance from Rutgers University. I also want to give you a little background on our guest speaker, Mark Teteris. He is the Vice President of Banking Solutions for Mortgage Success Source. In this role, he works closely with senior executives at mid to large-sized mortgage operations, helping them increase their revenue and reduce compliance exposure through successful implementation of the Mortgage Success Source solutions. He has led 2 multi-state mortgage banking firms as CEO and Chief Operating Officer. He's a past president, executive board member, and legislative committee chairman of the Minnesota Mortgage Association. He served on the business customer advisory boards for several top national lenders, including Wells Fargo and JP Morgan Chase. So with that, I'm actually going to pass it over to Mark. And as I said before, he's going to be going over market conditions. So Mark, I'm going to make you the presenter now, and welcome to the webinar. Are you there, Mark? Mark, you dialed in? Let me go check on Mark's audio. Bear with me 1 second.
This is here. Should
Hello?
be working just fine. Yeah, Scott?
I got you now.
Okay, all right. Sorry about that. Sorry, everybody. So, okay,
No worries.
Are you able to see my screen on your end now, Scott?
You have the guest slide up right now?
I have the guest slide up, and now I am going to just move it to the pre-GFE loan presentation.
Awesome.
And you've got it. Okay, terrific. Okay, everybody, sorry to get off on a slow start there, but I'm here today to talk to you a little bit about the current market conditions, and particularly as it relates to the compliance arena initially, and then we're going to talk a little bit about the competitive environment. As Scott mentioned, I've been in the industry for exactly 20 years now. But the first 7 years of those were actually as a loan originator, so I'm very familiar with what the front-end process is all about. If you take your attention to the slide here, and I start off with a question: is this your, or is it your institution's pre-good faith estimate loan presentation? And it's interesting because as I've done focus groups around the country, I've heard from many loan officers that yes, in fact, this is indeed their initial contact or response to an initial inquiry from a potential new customer. And as you can see, at first glance, I walk through it and I say, well, that's pretty nice. It looks like the loan officer has got a nice couple of options. He gives a little bit of a synopsis of the inquiry's current loan, and then goes on to lay out a couple of options, a 30-year option with a rate and a payment, and a little bit of what that payment would save this person on a month. And this happens to be a refinance inquiry that was made by a personal friend of mine back in February. And so you can see the reaction here. My friend at that point had not applied for a loan. They had been given this loan officer's contact information, by another party and just got in touch to see what they could offer. And so he's still in the shopping process here. So, okay, so there we go. So we've got a very nice email back to the customer. The loan officer is following up, going to try to convert this lead now into a customer. And I'd like to just, I can't do this by a show of hands, but if you guys would think about this for a second, does this constitute an advertisement? And I'll bring your attention to a recent development, and this is on the compliance front. Back in August of 2011, the Federal Trade Commission issued what they call their Mortgage Acts and Practices advertising rule. And one part of that rule set out the definition of a commercial communication. And you can see I've got it up on the screen, and a commercial communication is any written or oral statement, illustration, or depiction that is designed to effect a sale or create interest in purchasing goods or services, whether it appears on or in various media. And it goes on to list a number of examples of various media that's available today. The bottom line is that the media is actually irrelevant. It's the fact that the statement is made with the intent of effecting a sale or creating interest in a sale that turns that communication piece into a commercial communication, or in other words, an advertisement. And as we all know in the business, and when we're advertising, we are now having to comply with a number of laws, particularly TILA and Reg Z, regarding the disclosures that must be contained in an advertisement. So I'm going to go back, and I'm going to pull up my friend's email again, and I ask you the question, is this your pre-GFE, and should it be? And you can see at this point, we've highlighted a few items to show that we've included what are called trigger terms under TILA, which is any term of the loan or finance transaction. So it includes things like the term or length of the loan, the interest rate, any monthly payment. And so once we use one of those trigger terms, then we're required to also include in that commercial communication or advertisement all of the other pertinent and primary terms of the loan. So now we've done basically two things. We've established the fact that this email is an advertisement and therefore is regulated under the MAP Act and TILA, and we've established that it's really not very compliant. So let's go beyond that and see what it could be. And the question comes up, why do loan officers, and we've all done it, continue to use emails to communicate important loan information to prospects? And I would submit to you that the answer is that we're very pressed for time. We're not sure that it's a really solid lead yet, or for whatever reason, it's just easier than going into the LOS system, or we just don't, in fact, have a really good tool to use to communicate with the consumer or prospect what their loan options might look like with us. And so here we're just seeing a short, screenshot of what it potentially could look like in a properly disclosed format. And this would be, Scott will show you the live version, which is rendered much nicer when you'll see that. But what went into generating that lead in the first place? And now I'm going to shift gears a little bit here from the compliance aspect and really kind of think about what is it from a business standpoint. So as a loan officer, I know that I'm looking at, this is a career, and I want to make a return on my investment or time invested into my career. And I've put a lot into it. I've gone through perhaps licensing. I've had training, testing. I've been involved in a lot of marketing. I have tools and systems to track leads, to do my business. I might have been out attending or putting on training or events. And I have a lot of experience built up in the business. So all of these things are my table stakes, if you will, that get me into the game to where now I'm attracting leads. So I've invested an awful lot into making that happen. Now what has to happen next is I need to, of course, convert that lead into an actual 1003, put it in process, and get it to closing in order to get a return on my investment or further my career, if you will. Now, I'm going to show you another example that comes up short in this middle part here that talks about what happens in converting a lead into an actual application. And here's another, and again, this is a real live email that was sent in response to an inquiry from somebody that I know. And this one's a little bit different. The structure's a little different. It's still, by the way, like the other one, coming from a large national lender that you would all recognize the name. And what we see is, hey, Todd, great, below are the numbers we discussed. Based on today's rates, here's what I can do for you. And we can see we have a 30-year fixed at 3.5 and 1 point. I've got a 20-year fixed at 3 3/8 at 0.75, and I've got a 7-2 arm, at 2 3/8 with 1 1/8 points. And then he closes it with, please feel free to reach out to me with any additional questions. And I would say the answer is, I have no actionable information here as a consumer. I'm looking at this going, wow, that's interesting. I think I don't have any questions right now. What I'm going to do is call the next lender and get them to send me the same stuff and just look and see which one has the lowest interest rate. And so I really haven't done anything to attract the business to myself as a loan officer by doing it this way. But what we're going to see, and the psychology behind the BorrowSmart system, is one that understands consumers. And there was a lot of research done on this as the system was developed. And it really talks about the 3 primary questions that once a consumer can answer these questions with clear and concise information, they then are in a position to actually make a decision to take action and move forward. And having invested all those things, that's exactly what we want to do when we have a good lead. First question is, can I afford it now? Meaning, do I have the cash? So what's it going to take? If it's a refinance, it might be that I've got some closing costs or some escrow items that are going to have to put out cash out of pocket. If it's a purchase, I'm going to have, of course, a down payment to consider as well as closing costs. So the question is, do I have the cash? Then the second question, can I afford it now? And it simply means, do I have the cash flow? And we're talking about here, of course, the monthly payment. And so I need to see what the monthly payment is and how does that fit in. Am I comfortable with that payment? And once I know that I've got a yes answer to those first 2 questions, that leads to the third question. And this is the one that the consumer might not always think to ask, but in your role as a financial advisor, helping them to understand what their options for a mortgage, it's a great question to be able to answer. And it helps the consumer to actually, as you'll see with Scott, be able to have some options to choose amongst and therefore have actionable information to make a decision as to what is the net impact of this loan over a certain amount of time. And that time is really based on how long the consumer feels that they're going to be in a particular property or in a particular loan. And they have to be able to make a bit of an estimate on that, but if it's 10 years or 12 years or 7 years, excuse me, that's the number that you'll be able to use to help define for them and show them what their options and costs are long term and how that impacts their bottom line. And so with that, I think what we'll do is we'll go ahead and we'll move it over to Scott and let him walk us through some actual examples. And I believe he's going to show us, some real comparative situations where a consumer can decide which loan product will be the best one for them and in their best interest over the long haul. And I'm going to go ahead, I'll change the presenter back to Scott.
Thanks, Mark. So what I'm going to spend the next, as I said in the beginning, probably about 20, 25 minutes is going over the system we've developed over the past, got to be 2.5 years now, to deal with those industry changes that Mark showed you before. What we have here is the BorrowSmart Analysis web software. Some of you may have seen it before through demonstrations or webinars with Todd Ballinger. He is the founder and CEO of this product. I've worked hand in hand with him over the last, as I said, 2.5 years, developing this with top originators, getting recommendations, suggestions on what to do to make this product, first of all, easier to use, and then better for the client to understand that final product. So I think this latest release we have has some new features. So if some of you saw it in the past, you may see some things you haven't seen before. But as I said in the beginning of this webinar, what we're going to try and do is show you how to convert more leads into loans. And I'm going to actually do 2 examples today. One will be a refinance example, and the second will be a FHA versus conventional purchase. This is when some questions might arise. So as I said in the beginning, if you have those, type those into the question box. And after I'm finished with this presentation, I'll be glad to address those. So with that, I'm going to get started. This is a web-based software, and what that means is there's no download required. You don't have to download any software to your computer. If you're at work, you're at home, we'll provide you with the username and password. You can access this anywhere. And that helps now with these iPads and mobile devices where you may want to present in someone's home or at an open house or something of that nature. So there's nothing you need to download with this software. The first thing you want to do is setting your personal photo, a company logo, all your contact information. You could also set loan defaults. So programs you don't work with, you could remove. You could set ARM, floors and caps. So if you do recommend some ARMs once in a while, every time you recommend it, it'll pull based on these restrictions. You can have it follow the 1-year LIBOR and adjust for the worst case scenario. Click Save, and then every time you recommend that 5-year ARM, it'll have those floors and caps. You could also set appreciation rates. So you always want to recommend 1.5% appreciation, some general closing costs, tax and insurance. This is just to save you time as you're using the system. Once you get your profile set up, you're ready to start using the software. 80% of your time will be spent in this presentation tab. And I'm going to start with a refinance example. So I'm going to create a new plan. And what you're going to see throughout the demonstration here is the system is very easy to use. It's meant to save you time and at the end have a nice, clean presentation that your borrowers can understand while remaining compliant with all the new regulations in our industry. So I started a new plan. You'll see no name, refinance, no plan title. So I got to label it. What am I trying to do here? I have my drop-down menu. Refinance, purchase, second home, purchase, rent versus purchase, open house letter. These are all the templates you could use. Start with the refi. We'll just call this one webinar refinance. Pick a name for the client. Let's just do Joe Sample here. You'll see the fields in red are the ones we recommend. You can go into more detail if you want. It's not required. Some people are very analytical and want to have every field filled out. Myself, I'm not. I'll put in his income. Let's just say he makes $80,000 a year. If I want to know what tax bracket it is, this little calculator will show me the tax brackets for 2012. In a couple weeks, I'll change it to 2013. He's $80,000, falls right into that 25% federal tax bracket. So I'll add that in there. We'll just put a fake email, joe@AOL.com. And then you'll see this next section, current liabilities. This is where I'm going to add the details to his current mortgage. And what you'll see about our system is it has a lot of flexibility. And what I mean by that is if you just want to do a mortgage-to-mortgage refinance, that's absolutely fine. If I was doing a debt consolidation and I wanted to show stuff like credit cards, maybe wants to consolidate an auto loan, I have the ability to add any sort of monthly installment the borrower may have and show those strategies maybe the financial advisor would. For this demonstration, I'm going to keep it simple, and that's just to show when I'm doing a mortgage refinance, if I know he doesn't have the equity in the home, I'm not going to even bother putting those other liabilities in there. When I find I enter too many details, it leads to confusion, so I want to keep it as simple as possible. So let's just do something that's fresh in my head. This is a $300,000 property. It's a primary residence. He's in a 30-year. It's with Bank of America. The original loan amount was for $240,000. They put 20% down. This was back in January 1st, 2010. He's at 4.875. Current balance on that loan is $229. Let's put some mock property taxes, insurance. There's no MI on this loan because it's 20% down. Click Save. At this point, I'm pretty much done with my managed tab. I'm ready to go over the borrow. And this is where I'm going to show different loans up against that current mortgage at Bank of America. My first loan I'm going to show will just be a 30-year at a better rate, and then I'll label it. I'll just type this one 30-year. Let's say I'm offering 3 1/4 on that, so I type in 3 1/4. And then once again, I'll click this calculator. If you see a calculator in my system, it's there for a reason. Usually it's there to add additional information, and in this case, it's your closing costs. So let's just make up some mock numbers. Your closing costs could be whatever they are. And let's say I want to finance all these closing costs. He doesn't want to spend anything out of pocket. There's an easy include in loan button, so it'll finance those closing costs. And then maybe the second option I want to do is a 15-year mortgage. So I'll just copy everything I just did, change the loan program, and put in my new rate, maybe more from 2.5% on that 15-year. And you'll see in this little calculator, it already pulled my closing costs. I click Save. I have the ability to show up to 3 loan alternatives. And as I said before, I want to keep it simple. Chances are if I show 3, he's going to start asking about that third one, whether that's a 5-year ARM, whether that's a 10-year mortgage. Typically, I show one wealth building option. In this case, it's the 15, where the payment doesn't increase too much. And then this 30 will obviously save him a good amount per month compared to his original mortgage at Bank of America. And you'll see that answered in those 3 questions Mark went over. The first one is, does this make sense right now? His total closing costs in this transaction are $57.50. But I financed those, so it's a $0 out-of-pocket expense. If you hadn't financed those, it would show the borrower required to bring $5,700 to closing table right here as a negative red number. But in this scenario, it's nothing out of pocket. Does it make sense monthly? He was previously spending $1,642 a month. This 30 at 3 1/4, I'm taking him down to $1,394. That's a payment savings of $248 a month. If he were to move into that 15-year at 2.5%, it's going to pop up to $1,937. That's an additional $295. And then most importantly, does it make sense over time? This is a chart where I have some flexibility. Either I could set a fixed payment amount or a minimum. 9 times out of 10, I'm doing a minimum. And then what I could do is adjust the payment if necessary. Right off the bat, I'm going to show that $248 he's saving each month as an added payment for this new 30-year. Why am I doing that? Because then I could do one of 2 things. So he's going to make that each month, and I click Save. Once I add that additional payment, that's the money he's saving, I could show him he could do one of 2 things with that. He could then put that into a savings account and show a rate of return. Maybe he has kids going to college in 5 or 6 years, and he wants to start building that savings account. Or maybe his concern with doing this refinance was, I don't want to start a 30-year mortgage from day one. I'm already 3 years in. I know I can save some money per month, but I want to get this thing paid off a little faster. Well, in this example, my client's name was Joe. I could say, hey, Joe, listen, you just continue that same payment you've been making for 3 years. I drop you down to 3 1/4. I'm going to take 7 years off your total repayment schedule. And you can see that right here. In his current mortgage, he'd have 326 payments remaining. In my proposed 30-year, missed the line, he's got 257 payments remaining if he takes that $248 and makes that towards the principal payment each month. Maybe he has kids going to college, as I said before, and he wants to accumulate a savings balance. I could show him $248 over 7 years at a modest 2.5% rate of return. Comes out to $23,000 approximately, $22,740. So by doing this refinance, it's not costing him anything out of pocket. I can show him, Joe, I could build your savings account by almost $23,000 over the next 7 years. Depending what school you go for, that's a year or 2 of college. As far as net benefit of doing this refinance, let's just eliminate that monthly payment for now and talk payment savings. So if he were to move into this 30-year mortgage at 3.5% compared to his current over the next 7 years, which is flexible. I could set this to 10 if I want. Obviously, the further I look out, the bigger these numbers will be. So let's stick with 10 for now. Over the next 10 years, his net benefit of doing this refinance is $26,000. And what I mean by that is the increase or decrease in payments. In this scenario, it's a pretty large decrease, 197 to 167. He is losing a little equity. You see right here, he's going from 171,000 equity to 168. All that means is that 10 years from now, if he were to sell his house with a 1.5% appreciation rate, he get a check for 171,000 or 168. It's only about a difference of $3,000. So the total net benefit of doing this refinance is the savings in payments minus the loss in equity, gets them to $26,281. And how I would present that, I would say, Joe, listen, it's not costing you anything out of pocket. Over the next 10 years, if you don't do this refinance, it's going to cost you $26,000. And it's just a kind of a mindset process. When you put that cost word in front of it instead of a benefit, people are more likely to move due to negative things happening than positive. So that's how I would present. To each his own, but it seems to be working for some of the originators I've trained on that. If he could afford the additional $295 a month, I could show him the 15-year option, and he's going to be better off by a lot of money, about $52,000 over those next 10 years. But he may say, Scott, I don't have an additional $300 a month right now. And very easily, I can minimize that 15-year and just present the 30. For this option, or this demonstration, let's go to the Present tab. I'm done. I mean, I was done when I entered right here, unless I wanted to play around with this wealth impact chart. But the data entry on this site is minimal. It should take you no more than about 3 to 5 minutes when you're creating presentations on your own. Let's see what the final product looks like. Let me just go back real quick. We had one question on the wealth impact chart. Instead of doing this at the end, just take care of it now. Someone was asking, what is the difference between showing the payment as fixed and then checking the repay option versus manually adding the extra payment? In this scenario, if I were to set the payment at a fixed amount, my highest payment it actually sets to the highest payment, which is actually the 15-year mortgage. The only time I really used a fix if the highest payment was my current mortgage, and both of my scenarios were then less. You see, when I set to the minimum, the 15-year is more than the current, and the 30-year is less than the current. So as I said before, the only time I really use that fixed amount is when my current is higher than both these options. To each his own. As I said, you could use this chart however you want. It's a very powerful tool when you actually really get engaged with the systems. But in this scenario, I would set the minimum, then add the one specific amount to the 30. So let's go present now. And keep those questions coming. As you have anything else, feel free to type that in the question box. At this point, once again, I have some flexibility. I could choose the length of the report I want to send my borrower. And in this scenario, that was a really simple refinance. There's not much, there's no additional amenities, monthly installments, other liabilities I put in there. So let's just kind of do a one-page report. This is something new. We never had a one-page simple summary before. And this came at the recommendation of a few users and me from doing a lot of these demonstrations where I saw a benefit of something simple that can convey a borrower, show key points of a refinance, and moving from A to B. For a purchase, most of the time I do a two-page, and that's what I'll do next in the next demonstration. But let's show you what the final product looks like. I'm going to launch my presentation wizard. And if you saw the system in the past, this is our new presentation. It's a live, active HTML link. And what that means is we actually have a client IQ function where if you turn that on, anytime the client plays around with this presentation, you'll get a notification. What that means, if you send it to him today, he views it for 3 minutes, puts it on the back burner, and then 2 weeks later, he opens it again, you'll get an email saying Joe Sample has viewed your presentation, whatever that date may be. Say it's December 25th, Christmas Day. He's bored. He's looking at your presentation. Let's go through it. You have your cover page all branded up, photo, company logo, color scheme you determine. Introduction with a full disclosure, which protects you against all the stuff Mark spoke about before. And then this summary and payment information tab. This is the heart of your presentation. This goes over all the key information you'd want to show a borrower. Your key numbers are the most important. It goes over the estimated closing costs, money out of pocket for the borrower, that's your cash needed closing. In this scenario, it was 0, we financed it. Monthly payment increase or decrease, green is good, red is bad. His break-even months, at what point it becomes beneficial doing this refinance compared to his current mortgage. His wealth impact, which is what we determined to be how much better off he'd be or what it would cost him not to do this refinance. And then his break-even months. His debt-free months is the last, 360 or 180. The last slide is a loan program matrix. Whatever loan I'm recommending, it'll break down the advantages and disadvantages of that loan. When I'm doing a 30, I may or may not include this slide very easily. I could remove it, If I was showing maybe an ARM mortgage or I was changing programs, say he was in a 30 and I'm moving to a 15, then I would probably include that loan program matrix. But it's all about keeping it simple. A 3-page presentation is always better than a 4-page presentation if that 4th page isn't adding anything. I have the option to recommend whatever loan I want. So if he tells me, Scott, I'm comfortable with an extra $300. I just paid off my car. I could then click this 15-year as the proposed liability. And in my presentation, that one will stay highlighted. So I have the choice of the loan I want to highlight. The ways of getting this information to your client. I could download it as a PDF, just what it sounds like, attach it to an email or print it out. Built into my system is a live screen sharing option. So what I did with you guys, you now have the ability to do that with a borrower. So if he calls you on the phone and he's contemplating a refinance, you could do exactly what we did as he sees your screen, go over the presentation, and then send it him as an email attachment. So that live screen sharing option is very powerful. And there's no additional cost for that. It's embedded in my program. Last but not least is the ability to publish a video. This is something new we've added. It's about 3 weeks old. So if I have an opportunity to reach out to a borrower, I'm looking at his file. We did his loan 3 years ago. He's at 5%. I sent him emails. I've reached out to him by phone. I maybe sent him a hard piece of mail. And he hasn't responded to any of my means of communication. I'm going, what is this guy doing? He's at 5%. We're at 3.25 right now. I could probably save him $300 a month. That next step I may take, there's 2 things I could do. I could create the presentation as a PDF and hard mail it to him with a little handwritten piece of note highlighting some certain key pieces of information. Most people will open a piece of mail that's handwritten and mailed to them. It'll cost me $1 or $2, but I'm pretty sure that phone will ring. We've heard pretty good success with that. The second option, I'd couple that with a video. I'd say, Joe, let me actually start recording. I'll show you how it works. So I start my video recorder. I'd say, Joe, I just wanted to reach out to you. I was looking over your file. I know we did the loan about 3 years ago. We've had sporadic communication since then, but rates are at 3.25 right now. You have a great opportunity to maybe refinance your current home. Just wanted to go over some key pieces of information with you. I could save you about $250 a month. It's not going to cost you anything out of pocket. We're going to build in all your closing costs into the new mortgage. Over the next 10 years, by not doing this refinance, it's going to cost you about $26,000. You'll see over here, this is your current mortgage at Bank of America. This is what I'm thinking about doing for you, and so forth. Obviously, I'd go into more detail, but for you get the idea of how it would work. I click Done, and then brings up my email generator. I type in a subject, description. I put in his email, send it over. He'll open that email. He'll click play, and as long as I have a microphone on my computer, he will then hear my voice talking about that presentation and what I was trying to do for him. It adds a whole other layer to your business for those leads you might not be able to get on the phone, or that you started phone conversations with that never really got to finish. Maybe they had to jump off the call for some reason. You didn't get to finish that conversation. So you couple that call with a video presentation of the loans you wanted to go over with them and fire that over. Best way to do these presentations when you can't actually get someone on the phone or in your office, in my opinion, is these video presentations. And we archive all of them, so we save them if you ever lose them. All right, so that was a sample refinance. The next 5 to 10 minutes, I kind of want to go over where our market is heading and how you could use this system to benefit. Eventually, rates will increase. They're not going to stay where they are forever. And when they do, we are heading into spring. It's going to be purchase time. Building your relationships with referral partners and getting ready to get into that purchase market, the time to act is right now. As we head into the new year, you're not going to have to be able to get these refis and just start rolling with them. I mean, the purchases are a little more work. As Mark said, he originated, I originated. We know what it takes to get those through processing. So the selling happens again. And how will this tool help you start selling yourself? What it has is a mobile application. This is an application all of your referral partners can install on their smartphones. It works for iPhones or Androids. What does that mean? We invite them as a user. So I could send Raymond, he's my fake realtor, instructions how to install this application on his smartphone. He's got an iPhone or Android, there's instructions right there. Once it's on his smartphone, the home page is my mobile business card. So it has all my contact information. I can link it to my social media sites, Facebook, LinkedIn, Twitter. It'll have my picture, my company logo. It also has 3 other tabs. There's a great payment calculator in here. Let me paint a picture. I'm a realtor. I'm at an open house on Saturday. I see someone walking around the home, and they're thinking about purchasing. They tell me I have $10,000 for a down payment. I can afford around $1,000 a month. That's how my payment calculator in this works. Based on current loan interest rates, it's a national average. I put in what the client has for a down payment and how much they could spend per month. Click Submit. It'll show me approximate how much of a home they could afford based on current loan interest rates. So that's great for realtors. We did some studies. That's how they were looking at it, and it kind of works in reverse to most calculators out there, but they love that. It also has current loan interest rates. It's a national average, and we actually add 1/4 point just to be safe, but it gives them an idea where interest rates are at. The most important tab is this Refer Me tab. What this does, it has the ability for a realtor to send information your way at any time during the day. What does that mean? I'm a realtor. At 6 o'clock at night, I'm out to dinner. I come across someone who says, Scott, I hear rates are pretty low right now. I know you kind of work in the industry. Do you think maybe I should consider a refi? Absolutely. Let me send you over to Scott Remite. I hear he's got great rates right now. He has this great program, Borrow Smart. He can kind of show you the benefit of doing the refi. So they go into the Refer Me tab. They put that client's name, email address, phone number. They click Submit. Simultaneously, that client will now get an email with my mobile business card, which you see right here, so they can get in contact with me. And then I'll also get an email notification saying, Scott, you need to reach out to Joe Borrower. He's interested in a refi. So picture, as I said, a realtor handing 2 paper business cards over the internet so parties can get in contact with each other. This is all in our mobile application version of the website. Once again, it's all included in the monthly fee. And if you have the system or are thinking about it, definitely something to really start using as we get into the spring. With that, I'm going to jump into an FHA versus conventional plan. Probably take me about 5 minutes, but you'll get an idea of how you could use this system on the purchase end. Some of my clients really are refi heavy, and they haven't used it too much for purchases because they're coming from great leads, or they kind of think they have it sold already. But being effectively able to show the borrowers stuff like FHA versus conventional, coming up with that additional 1.5% down, how much better they'll be over time, really does a benefit for your client. And if they do end up shopping you, it'll really make all the difference in terms of professionalism, make you stand apart from your competition. So let's do that right now. I'm going to create a new plan. This time, pick Purchase from my drop-down menu. Let's just say it's a $200,000 contract price. We'll call this one FHA versus conventional. Once again, just make up some sample information. This guy Joe Smith this time. We'll use the same income, same tax bracket, same fake email. If I wanted to, I could put in some current liabilities. Maybe he was currently renting. This is his first home. Maybe he's got some credit card debt. He's saying, Scott, I want to know what my total monthly payment will be if I buy this home. I'm currently living at home. I'm spending, I don't know, probably around $1,200 a month on bills. I can actually break that down for him. I can say, all right, well, what's your auto payment? What are your credit cards? Do you have any student loans? For this demonstration, let's just keep it simple, as I said before, and go over the borrow tab at this point. "30-year FHA. I'm just going to label my first loan. And I'll pick a 30-year from my drop-down menu. Click it. All right, remove this equity line of credit. Do our loan to value, 96.5. Pick our same rate as before, 3.25. Click our calculator. Let's just put in some of those mock closing costs again. And maybe there's a seller credit this time. Seller credit of $2,000. That's what that field is. We actually have an open credit field too that you can label anything you want. But right up top, you see this is an FHA VA USD loan. This one is, so I'm going to click that box. It adds my upfront funding fee. I'll put that in 1.75%, and then I'll finance that. Let's do our taxes again. homeowners insurance. We'll add our monthly MI, 1 1/4. We'll have that continue for a minimum of 60 payments and 78% on loan to value. I click Save. So I have my first option on my 30-year FHA. Second, I want to show a 5% conventional, so I'll label that. 30-year, 5% down. The reason I label the loans is so when I do present them, they look nicer than just alternative 1, alternative 2. So I'll copy everything I did, adjust my loan to value, click the calculator, remove the FHA box, adjust my MI, maybe it's like 0.86 on this guy, click Save. And maybe a third option that I want to show would be a 5% conventional or any percent down with lender paid MI. I'm going to show you how that works. So I'm going to duplicate what I just did, label this one. 5% lender MI. So then what I'm going to do here, make sure my LTV matches up. Maybe on this one with a little pop-up in rate, maybe it's going to like 3.5 here, maybe even a little higher. But what I'm going to do here is eliminate the monthly MI. I've talked to a few loan officers a few ways to do that. Sometimes they'll pay an additional percentage down based on their credit score. Other times they'll do it as a rate increase. So however you may do that, or if you don't do it at all, see if it's something you guys offer, because eliminating that monthly MI with a small increase in rate or percentage down as a closing cost, what you'll actually see in the presentation is this does a lot of benefit for the borrower. All right, so I got my three options, my 30-year FHA, my 5% conventional, and my 5% with the lender mortgage insurance paid. Once again, it's going to show the money out of pocket required for the borrower. My total closing cost with down payment for the FHA, $11,250. Then for my 5% down, I'm at $14,250 for the both of those. What about on a month-to-month basis? My 30-year FHA is costing me $1,328. My 5% down conventional, $1,229. It's $99 less than the FHA. And then my 5% conventional with lender paid MI, it's $1,121. It's $207 less than the FHA mortgage. If I wanted to, I could show tax adjustments based on the bracket I entered before. It will then show my borrower how much of that loan is tax deductible per month based on his bracket that he's in. Once again, great thing to present to first-time home buyers. If you don't, they may have been spending $900 to $1,000 before on rent, and when they see these initial monthly payments like the FHA at $1,328, that might be a little bit of a sticker shock for them. But at the end of the year, realistically, when they get their tax return, that FHA might have only been $92 more than their current mortgage. Or with these other options, might be right in line with what they were paying before. So show the tax savings if you want. You don't have to. You can minimize that, but it's an option we give you. And then go to that wealth impact chart. Now, since I don't have a current mortgage, it's going to compare these options against each other using the FHA as a staple. And then what's going to show my borrower over whatever time frame I set. Let's look 5 years out this time. It's going to show him how much better off he'd be with these 5% conventional options compared to the FHA. And you'll see the lender paid MI is definitely better than the 5% conventional, and the 5% conventional is definitely better than the FHA. When I go into detail, it's probably going to be, this is the minimum once again, it's going to be a combination of an increase or decrease in payments, and here we have a decrease in payments across the board, and an increase in equity in this scenario. So he's saving money, and he's getting more towards his equity over those 5 years. At some point in the loan, the lower rate with this 30-year 5% down compared to the lender MI at 3.5% might take effect. I'm going to have to look pretty far out. You'll see the intersection point. So it's around that 25-year mark that you see now. This is now $20,000 better off versus $19,500. So as I said, if he's going to be in that house for the next 25 years and never refinance, at some point this will become better. But for about 24 years, this is the best option for him. If I go to 24 years, you'll see they're right in line with each other. It's about that 23.5-year mark. So I have a lot of flexibility with that time frame, and I have a lot of flexibility with these charts. So I would just set it at 5, present, And then I have those same methods as I had before. I'd launch the wizard, depending on my presentation. I'm going to do the 2-page detailed summary this time. Once again, I have my cover page, the introduction with the disclosure, and then the summary and payment comparison. I showed you that page before. Same thing just now with the purchase, shows percentage going towards interest, mortgage balance remaining after those 5 years, total payments, and then this wealth comparison. This is that second page that I didn't have before. I had the 1-page report before. The only difference here is it now breaks down the monthly payment in more detail, what is entailed in that 1328, 1229, or 1121, and then it shows them the wealth impact. So instead of just saying he's better off by $8,000 or $14,000, if you wanted to know why, I could show him. I could say, Joe, it's because you're saving money in payments over those 5 years, and your house is worth more if you were to sell that day. My house isn't worth more. He'd actually get a check for a larger amount by about $5,000 if we sell 5 years from now. So very easily, I can compare loans side by side in about 3 to 5 minutes. So when I have that first point of contact with a borrower, this is the first thing I do. Before I get them on the phone, I'm already thinking about what loans I might present to them. Typically, my clients can, as I said, get this done in about 3 to 5 minutes, so it should save you some time. And then you have an archive of everything you've ever done. You'll see over here, I have a lot of plans in my system. I've been using this for a long time, but it saves everything. So if you need to do something for Kerry you did 6 months ago, you can pull up her plan and edit it. You could also duplicate plans. It's a feature that I use a lot. So if I wanted to copy this plan, I click Duplicate Client. And if I want to show that same FHA versus conventional option with another borrower, I now have a copy. I could change the personal information. I could change obviously the name, the income, the contract price, but then my loan scenarios are the same. So I wouldn't have to enter any more information. I could use this as almost like a template and just do the same presentation I did with another borrower just by changing the sensitive information. So instead of 3 to 5 minutes, it's only going to take me 1 to 2 then. I use that copy feature a lot. The last thing I want to show you is the open house flyer. One of the templates we have is an open house flyer. And I'm not going to go through one from start to finish. I'm actually going to show you one I've done in the past for time purposes. Let me click this Parkside Boulevard open house flyer. So kind of the same process as we went through before. You put the property price, the address. I can co-brand it with a realtor. And once a realtor is in here, they're in here forever. We archive them. So if I add Jason's photo, logo, contact information, it's now saved. And anytime I want to do an open house flyer with Jason, I can pull it up. I put the property description, all the amenities. You'll see open fields here. If there's an amenity the home has that we don't list, my disclaimer. I could upload a property photo. I could show a map of the property if I wanted to, where it's located. Here's in Freehold Township, New Jersey. Go to the Borrow tab, put the loan programs I want to offer for that. In this scenario, I have 2 30 years and then a 15-year. It could be whatever you want to offer for that property. You can put the closing costs just like we did before. You do have an annual income to qualify that you could set. So whatever you think the annual income to qualify for that property is, you go to present, and then you launch the wizard. And this is only going to be one option. It's the open house line. You see it right here. It'll have your picture, contact information right up top, your company logo, all the amenities of that property, the property photo, the loan programs you want to offer, full disclosure based on whatever loan programs you're recommending. So if I had an ARM in here, this probably would be a little longer. And then the realtor's information, photo, company logo right at the bottom. So within about 3 to 5 minutes of data entry, you have a compliant open house flyer. And these are going to become, I don't know how many people use these or have a template they use already right now, but chances are it has a lot of manual entry. It's not calculating stuff like APR, closing costs, down payments. This is all calculated on the back end of our system, so it should save you some time, and it's compliant. That was the last thing in our system I wanted to show you. I hope you got at least 1 or 2 tips out of this webinar on how to maybe convert some more leads into loans or get that process a little more streamlined. I think one of the things we offered when you opted in to join this webinar was to take a free trial. We are offering a 21-day trial to the system. to use it as a full user would. We may have a special pricing promotion for anyone that attended this webinar, just to give you the breakdown on the system and what everything I showed you cost today. It's $47 a month for this whole system. That includes the open house flyer, the mobile application, the live screen share, the video recorder, everything you got in here. I'm going to spend the last 5-10 minutes addressing questions. I saw a few come up as we were going through it. Adding the video feature to the presentation, is it just the audio recording or it includes the video too? It includes both of those things. So you'll hear my voice and me scrolling through the screen. So if I was going through that, for example, purchase presentation we just did, I launched the wizard, and I started by my video recorder. As my mouse goes along, it's recording my video capabilities along with my voice going over the screen. So if I want to highlight some certain things, I can highlight it with my mouse, and I'll be able to see that me going through the screens. Could this be hosted on our server, or does it have to be hosted on yours? Everything on this system is stored in our servers, and they have been looked at by some of the biggest banks in the industry, so they are protected. But at the same time, every plan in here can be exported if you decide to. You can export all your clients to a CSV file, and you'll have all those plans saved in an Excel spreadsheet. Can we start the 21-day trial in January and not going to be around much the last 2 weeks of this month? Yes. That's something you'd have to reach out to me directly, and then I can get you set up with a trial whenever you think it's appropriate. Let me bring up my contact information. I'll also bring up Mark's. So here, if you want to jot this down, individual loan officers, feel free to contact me at my extension. The number is 1-800-963-1900. Extension, it's actually 1579, not 1577, that might be a typo. Or Remite, that's SREMITE at MSSLLC.com. If you think your company might be interested in looking at this solution or taking a demonstration, feel free to contact Mark Teteris at 1-800-963-1900. That's extension 1573. Or Teteris, MTETERIS at MSSLLC.com. I will show this one more time before the webinar is over. We do have a few more questions. Can you organize those recent plans into folders? Yes and no. Let me get out of this slide. Let's see. These are my quick select of a reference plan. I have the ability to load plans into this quick select by clicking over here. So I want to load Hank's plan, and I want to edit it. It'll then load Hank's into my quick select. As I said, you can export those plans and then group them by files in an Excel folder. So you have some capabilities. We could always edit a plan and send it over to your quick select. Does the borrower data we input flow into any current point-of-sale systems, Fannie Mae 3.2? Yes. Part of the Present tab has the ability to export a file to a Fannie Mae 3.2, right down here. So if I wanted to export this, I have the ability to export it. The other little blue link over here is my client IQ. So if I wanted to see if his viewing log, when he clicked in it, how it worked, it'd be right over here. That's my client IQ status. Does the MSS logo stay on everything, or is it your examples only? That's just my technical company logo. So whatever your company logo may be, it would be your company here. So say you're with Bank of America, Wells Fargo. That's the logo that would be there. You upload that into my account. That's the first thing I went over. So you have the ability to brand it based on your company's information. How customizable is the open house flyer? Pretty customizable. We have 4 options in there. I showed you the property flyer vertical before. There's actually 4 flyers in the open house template. There's 2 finance flyers, a light and a full. That's the vertical one as I showed you, and the property flyer, which actually goes over a little more property information. We may be adding some more templates here in the near future, but most of these are sufficient for everything you're looking to do as far as open house. How does the system show the best option? The scenario just showed comparing the 15 clearly has pros and cons depending on their viewpoint. Does the system default to monthly savings to determine the best option? Once again, you're determining the best option. So there's really no, I don't want to say there's a right or a wrong, but depending on the borrower situation, whatever loan based on your conversation that you think is best, that's the one you propose. So that's the one that'll stay highlighted throughout the presentation. How many compares can you do in their presentation? Is it 2 to the max? Is it 2 compares to the max, or can you do 3 or even 4? There's technically no limit to the amount of comparisons you could do. On each plan, you're locked into 3, so I can compare 3 alternatives to each other. But what I could do, like I showed you before, is make a copy. Say in one plan I want to show 3 30-year options, and then next I want to show 3 15 years. Very easily could I copy the plan I just did, click the duplicate button, and then label the copy 15-year options. So maybe the first shows a 30 with points, a 30 with lender pay to mine, and a standard 30-year. And the second one I want to show the 15 with those same 3 options. So technically I could show no limit, but it will have 2 presentations I'd have to print out. One presentation would be for 30 years, and one presentation would be for 15 years. But on each single plan, there's 3 in each presentation. As you see right here, if I wanted to just show 2, I minimize it with that little minus arrow and it hides. We see there were some issues accessing the Borrow Smart mobile site from an Android phone. A couple of our employees use Androids and have no phones. I know we have plenty of clients on that. The only thing I can think of is renaming your site. Like my mobile site has a specific name. Mine is my first initial last name. Sometimes you just need to rename it and set it back to your original one and refresh it. So my mobile is borrowsmartmobile.com/sremite. You have to go to that exact site. Sometimes it's just clearing your cookies out, but we haven't had any issues with iPhones, and most Androids have worked no problem also. All right, well, let's see if we have any more questions. What is the microsite tab for? Since we do have 3 more minutes left, I will go over, so I wasn't sure if we're going to have enough time. The microsite is a landing page that we create for you. So here's my specific landing page, borrowsmartanalysis.com/secure-remite. Once again, I pick my name, so typically it's a first initial last name. Anywhere where you have internet presence, whether that's your personal web page, a company web page, you have the ability to take that link that I had before, right here, copy and paste that, and right above it type in a little blurb. Interested in a refinance or purchase, click here. A client can go to your artificial intelligence website, and once again, this will be your company logo, input their information. First-time users have to create an account. All they need is an email and a password. We're not asking for their life. Once they create an account, they can put in some personal information, name, address, how long they've been at the property, what they're looking to do. And when they click submit, it says Scott Remite will deliver them a plan as soon as possible. But then what happens is I get an email saying Joe Borrower has visited my site requesting that a plan be done for them. If I'm by my computer and I'm free, I'm going to call them, start do a live screen share with them, and go through it then. Get it done. And I'm telling you, the impression that people get when they see that technology, it gives them that wow factor and really blows them away that you could, within about 5 minutes, know they were on your site, get them up and going, show them your screen, and then go over those loan options with them. So that's our microsites. And once again, this is included in the monthly fee. If you haven't set up, you have the system, definitely get involved with the mobile app, the microsites, start doing the open house flyer template. There's a lot of little features that come along with the core presentation tab. And just to give you an example, this mobile site was once sold on its own for $23 a month as a separate service. Now it's built into the Borrow Smart. Most live screen sharing companies charge between $15 and $20 a month. Open house flyer templates go between $10 to $15 a month. As I said in the beginning, or almost towards the end of our call, $47 a month or $470 for the year gets you everything you saw today. Take that trial, use it as a full user would. We'll probably follow up, see how that's going. If you have any other questions, Once again, here's mine and Mark's contact info. Get the right PowerPoint. Feel free to contact us with anything you may need. This webinar will be recorded, so if you know someone that would like to watch it or you just like to review it again, we will have that available, and we'll send out a link to watch that. But I thank you for taking your time out of your day to listening to our Convert More Leads into Loans webinar, and I look forward to working with some of you in the future. Thanks a lot, and have a great rest of your day. Thanks again, Mark, for the guest appearance. It was a great industry capture of where we are today.
So, Scott, while there's still a few folks on the line, I'd like to just make one point. If you're working for a larger organization, some of the questions that came up regarding export, working with folders, hosting, customization, in the enterprise solutions where we're working at the corporate level with your IT and compliance and marketing folks, there are many options available there for customization. So just want to make sure that everybody's aware of that out there. And again, thank you as well. I apologize, my voice is a little bit gone today. But I just want to leave you with the thought, whoever is most effective at converting potential business into closed business in the coming purchase market will be the winners. And it all starts with the prospect committing to doing business with you. So, and thank you, Scott, for a terrific presentation. I'm sure everybody got a lot out of it. So thanks, everybody.
Awesome. And as I said before, have a great rest of your day. Feel free to feed those questions. We'll be glad to help you guys out. Thanks again.